What's going on, traders? Welcome back to Hong Kong. Today I want to share with you my thoughts and my advice on risk management. This is something I learned a lot about for the past few years. I used to think that risk management was a boring topic, very limiting lessons in that, and that I could manage my risk myself. But I learned over time that there's a lot more to it, to risk management. And I want to share with you some tips. I've got 5, and I want to share with you how you can manage your risk better. Those are things you have to think about and that you have to implement properly when you trade live. Especially if you trade for other people, and especially if you want to manage money in your life. If that's your goal, then learn to manage your risk pretty well. If that's not your goal, still learn to manage your risk pretty well. The principles I'll share with you today are things that will make you a profitable trader in the long term. Now, if your goal is to be short term, I want to make a lot of money soon, that's fine, but you won't be around for long. If your goal is to stay in trading for the long term, which means getting big results in the long term, then I want to share with you these things. And these you have to think about them and apply them properly so you can see better results over time. Now, most people think, and here's the biggest myth, that risk management is only about reducing the number of losses and that you should just think about not losing and then you will make money. And I found out that's not what it is at all. Now, here's the thing. People say if you manage your risk well, doesn't matter how much money you risk per trade, doesn't matter anything of that, you can make still money because you have a few losses and you don't lose much money. And that's not the case, because we are all as traders going to go through losses, drawdowns, tough times, and those are the times that kind of shape you as a trader. They shape you in the fact that are you going to be losing and crying after, or are you going to kind of fight the battle and show up after? And this is the big difference. People that think risk management is only about the losses and not having them at all or minimizing them, they don't think about the other things around. And when they have to go in a battle like this to kind of fight, then they have no clue what to do. They're just stuck there. And that's not what you want to be at all. So here are the concepts you have to think about putting in your trading and applying them. The first one is the risk of ruin. And this is something I've talked about before, so I won't talk for hours about this. I'll put a video that you can watch about the risk of ruin. But in short, you want to be able to decide how much you can risk per trade. What's the maximum you can go on one trade? And calculate and make sure the risk of ruin is 0%, which means you cannot ever blow up your account. And I just talked with a new member of the Desire Trade Academy that said his risk of ruin was 10%. And 10%, although that might seem low, 10% of blowing up your account, it kind of compounds every year and it kind of becomes bigger and bigger over time, which means that you are pretty much likely to blow up your account. And that's the thing you want to correct pretty fast. So you want to be able to master this and make sure that you have no chance of blowing up your account, because your capital should be staying in your account. People think only trade with money you can afford to lose, but I don't agree with that, because you don't want to lose the capital that you trade with. You can lose a part of it, and that's going to be part of the normal drawdowns, but you can't lose all of it. That's a business, that's an investment, which you should be responsible for. And so that's the very important thing. So if you wonder how much you can risk on a trade right now, watch the video below. It's going to tell you exactly kind of what you have to compute. I'll also put an article on that as well, because I don't want to go through the same stuff all the time. But that's it for the risk of ruin. Now the other thing is, let's say as a trader that you combine systems, which means that you have a system for breakouts, a system for pullbacks, and a system for reversals, or whatever you think about. Okay, so whatever system you have. Now try to find out, are these systems correlated? And if the answer is yes, you might be a little bit in a problem. If they're not correlated, then that's fine. But you want to be able to build a risk management profile based on these systems and make sure they're not too correlated. Because if they are correlated, then you will just multiply your drawdown. And yes, your gains will be multiplied, but your drawdown will be multiplied, and that really is not cool at all. So the more you do your research and you prepare your stuff, the more you can know, well, these systems are correlated, so when one fails, I won't trade the other one. Or when this one does this, I won't trade the other one. Or when they all have setup, I'll take all the setup because they're not correlated and I'm going to minimize my risk. But you want to compute your risk management with those systems and make sure that you can sustain a drawdown for each, and that maybe even you have a different account for each, so you can kind of separate everything. Or at least that you're not multiplying your drawdown because you have multiple systems. Okay, that you are minimizing the drawdown in fact. And that's done by putting some curves together of your system, equity curve, and just testing out and see what works. Okay, but very important to understand. And you can perform correlation if you want with some data analysis tools. So is the system P&L correlated with the other one? What's the correlation? So if you have a strong correlation, it means that both go in the same direction. It could be that when one loses, the other one wins, and that would be fine. But it could be also that when one wins, the other one wins, and that would not be fine in my opinion. Okay, so try to be careful. Then you want to think about your external income. So what if you have no income from trading in a month? What do you do? And that's the thing you have to think about. Like risk management in the word itself, the term itself, means taking care of the risk, looking at the risk around you and taking care. So if you don't take care of the risk and you only think about, oh, it's about not having losses or be careful of the risk of ruin, well, that's only part of it. Think about the other things around, like what can happen, and make a plan for those. One thing that can happen for sure is not having income in a month from trading. So how do you deal with that? What do? You take income from outside, you call someone, call a friend, you talk with your spouse or your husband, whatever. What do you do to find income for that month? And that's going to be important to define. So are you going to have external sources of income? And if that's yes, identify them, make sure that they work. Make sure that they are not correlated with trading, of course. So like if you have no trading income 1 month, you still have this other income coming in. They cannot be correlated, otherwise it's going to be tough. That's very important to understand and very important to assess and take care of. Point number 4, how about taking measures to not lose your money in your account online? So there's been some cases, and I heard that before, of people that they get stolen their money from their trading account for some reason. And I know brokers have been working on measures to kind of prevent that. So the fact that you have to withdraw in your own account. But what if the system crashes, or what if like something happens and you cannot access your account online or whatever? Do you have money on the side? Do you put all your money in your trading account and just expect to compound it and make it really big? Or you take some money out for a time where you will need money and you cannot wait for the broker to withdraw the money and give you the money back in your account. That's important to understand also. Like what measures do you take so that people won't know your password for your account and they won't be able to do anything with that? Okay, those are important things. And that might mean like changing your password often, going back and withdrawing some money as you earn income to put it in other asset class or other things that you want to work on. And that's going to be important as well to manage that risk. Fifth thing is you're going to have to compute your leverage, and that's just a simple fact. But based on the risk of ruin, I'm not sure why I put this point at the end, but understand leverage, right? Leverage is about how much money you need per trade. And that also means that you might have a big leverage and then you make a mistake in your position size and you enter a huge trade. How do you react to this? What's the rule? And if you don't know, you might say, oh, I'll just leave it open and see what happens, and hopefully I can make some money. But if you are smart a little bit, and maybe you've even gone through that, which I did, you will want to close the trade pretty fast and you will want to kind of cut your losses short. It's a mistake, it sucks, but you are in a place where you need to be making those decisions before they happen, so you know what to do in that case. And so leverage is only a small part, but you're gonna have to compute that based on how many trades you take on average, what's the maximum of trades open at the same time, and what you have in your account. So do you take 5 trades at the top maximum, and then your account with your leverage now only allows you to take 3? Like, you don't want to be stuck changing your leverage because you have to take a trade. That won't work. So plan it beforehand, compute that beforehand. You can find the math in different websites and stuff and compute that to other places, but your broker can help you with that. Those are things you have to think about. So this is kind of a rundown. There's a lot more we can go into. We have an awesome course in the Academy about risk management that you can go check out if you are a member. If not, we'll put a link below maybe to sign up and check it out. But if you'd like to know your thoughts down below as always, comment below with your thought there. Here are a few comments from the past video. I appreciate you guys always for leaving comments down below in the comment section. Subscribe if it's not done yet, and I'll catch you back here for another video in Hong Kong tomorrow. Ciao.